All right, traders, welcome to today's recap. This is Monday, July 16th, and this is Christian from Tribeca Trade Group. And we'll start with Netflix. They missed pretty decently across the board with their numbers. I think they beat on the bottom line, but they missed on the top line. It was pretty messy. Let's see if I could just bring up the headlines just so you could see. The expectations were really high, I think, for the quarter. I think overall, if you look at their numbers, you're probably, and if you didn't see what the expectations were, you were probably like, oh, geez, the numbers were really good. But it's all about the expectations, and it's all about the guidance as well. That's always the case for earnings names, and you could see the net streaming ads from what they were expecting was a miss. And when you have a very high price stock like Netflix, which is literally, we were looking at this for the earnings setup at the end of the day, just going through the numbers. But I was surprised that they had went up basically a third of their price since the last quarter. And I know they're up over 100% year to date. So and you could see from the last quarter, from here they were at 300, and they're up to 400. So as I had said, you really they had to hit the ball out of the park in every metric at this point when you're up that much. So I had sold an iron condor, which I don't think that's going to work. I thought that the market makers were implying an 8.7% move. I thought they would have some better numbers, but I just didn't think that they would go up too much from here. So I did that. I literally only did a one lot just to participate. So I'll probably lose about $250 or something on that on that trade. Not the end of the world. Like I said, I do usually trade Netflix just to participate, but I always risk very little money. So this could cause the overall group to kind of go down a little bit. In the short term, Amazon, which really got extended today, you could see is selling off your pre-market. A couple of the other names like IQ are going to be down. Momentum, right? Momentum is going to go down a little bit on this, and it doesn't look like these stocks are down that much. HUA, which saw call activity today, also down after the close there. So it's going to take a little bit of a hit to momentum. This is what I put together on the weekend, in case you're not familiar, but put out a newsletter where I really do a lot of thinking about what's going on in the market and really strategy. So I do have best, trade ideas, but it's really, in this market, and if you're trading options like I am and a lot of the members are, you really have to be able to kind of stick and move with some of your positions, take targets. It's a lot different than stock trading. And, when you have a good couple of up days, you want to take profits, which is basically what I did on Thursday. I didn't do much trading on Friday. And then and then today, I didn't do much at all as well. And I'll show you just so that you know that I'm not making this up and not just preaching and not following. But, I bought some overstock today. I did buy some KUA. Here it is. Just, and small stuff. I'm just buying 100 shares just to participate a little bit, but that's it. You could see I'm not over trading because I'm being patient. I'm practicing what I'm appreciating, I'm practicing what I'm preaching. And, just to sum up some of the things that I put in here is that you have to be patient, and you could see this big last line I have highlighted from the newsletter. Be patient and wait for opportunities. Buying on red has been really, really good this in 2018. Buying when the market is green, not so good. And I don't have a measurement for that, but you can kind of feel it. Buying on green and on breakouts, unless a name hasn't done, too much. Like a good example would be, something like this. Something like Melly, which we bought in the room on Friday. And again, not a huge trade because, the name reports, there's only monthlies. So I could only really buy the Julys. So I structured a call spread for this. 225. I put this trade on and took it off. I took one target at 520. Took another target for $7. So, so it's nice to have a trade like that in a really slow day. So that helped the old P&L today. But yeah, something like this, a break over the 200-day moving average out of consolidation is completely different. So, that was my trade of the day. And thank you. I don't want to mention his the member's name, but really nice job because I didn't ask him for permission. But this was a member brought this to attention, and that's just the strength of the room when you have somebody bringing that up, and not a position that I held into Friday, and structured a trade around that. So that's it. So we may get a little bit of you may get a little bit of a buying opportunity tomorrow in some names. Again, for me. I think you kind of have to wait. What I would be doing at least is waiting the so-called 3-day rule in Netflix. Let this kind of set in, and let the information be digested. Again, this is from a name that was up a lot, a decent miss, but I think you will get an opportunity, and we'll see what we get in terms of where people buy the dip tomorrow in terms of the momentum names. All considering that when something like this happens, as I said, names will be down in sympathy. So this could really set up some nice buying opportunities for tomorrow. If you've been sitting on your hands since Thursday, like I have, you might really get an opportunity in some things to kind of pick out a couple names. So option activity was really light today. It was really about the financials. Sometimes this happens after after a good couple of them, where the earnings are released. For whatever reason, J.P. Morgan and Citigroup, they were kind of rough. They did not do much, but really, J.P. Morgan, after some decent earnings, now gets the move today. Maybe people wanted to see what BAC did today, but there was some nice buying in J.P. Morgan today. And if you kind of zoom out and look at the chart, and if you've been following me for a while, if you've been in the trading for a while, you know that I've had an underweight position in the financials. But this, just to kind of block out the symbol, which you could do very easily. You could go like this in your ticker box and say, I really like the setup in JP Morgan. So that's the one I like. That's the one that they were buying right out of the gate this morning. If I go to my option volume sheet, this is what I tend to look for when a name hasn't done anything. And somebody says, okay, that's it. I'm buying JP Morgan, and I'm buying it aggressively. So they bought some August calls. They did buy some closer, 27th and August 10th. And so I like this. I like JP Morgan. Now, and you can use the 200-day moving average as your stop. As long as you also have a tradable level too. It doesn't really matter what ticker it is, as long as you're sizing it appropriately and using support. So I like JP Morgan. A couple other names, I could look at a couple of the other ones. I think some of these are going to look similar, except Citigroup is underneath the 200-day moving average. BAC also you could basically see, and that's another one. You could almost use the 50-day moving average for a trend line, but you could draw one right in here for BAC. And they were also buying BAC stock, which, let's face it, they buy BAC almost every day in options. It's tough to tell that one. I mean, you could basically come in and say, oh, it's up today. There was calls that were bought today. They were buying calls all last week as well. They were buying calls the week before in BAC. But the chart looks a little bit different today. And you got your first nice green bar and a move above the 200-day moving average. Another chart that we've been talking about in the room is if you plot XLK over XLF, right? This is a 5-year chart. If you go to a 1-year chart, you could see tech has really outperformed the financials. So finally, they're coming a little bit off the highs here. And we'll see. Maybe it's the bank's turn to rally a little bit. Don't forget, we get Morgan Stanley and we get Goldman Sachs out too. So I'm not completely out of the woods, but I think there were some nice things that were said out of the Bank of America call, and I think the CEO's on Kramer tonight at 6 o'clock. So those were the areas. The XLF was up 1.8%, so a big outperformer on the day. And we'll see if it can continue. We've been seeing these one-day moves basically when there's strength in financials, and it has a difficult time following through. For example, I think it was last Monday that had that. An interesting little pattern there, a few days down and then bang, up to the right. What didn't perform well today? Energy stocks. Oil really got hammered. If we pull up a oil chart today, which I'm not really exposed anymore to the energy names. I've got one name on. I took off. I got I got lucky with this one. In the beginning of Wednesday last week, I decided that the two names that I had on were not acting right, and I got out of RRC as well as Marathon really before they started to tank. So notice you do have some support here, 67.70. That's the top of value for oil. But those were your worst performers. Also, biotech got hit a little bit. You know, there was a couple names that I'm trying to what is it? EDIT and CRISPR, I think it was, had a bad. There was a bad note out about that name, which caused the whole group to kind of go down. The group was weak going into that anyway. So, you know, a lot of these names for the last 2 weeks, you know, biotech's been pretty hot. So it probably needed a day to kind of digest a little bit and then move from there. I'm still long XLV. You know, that is a name that I might add if it can kind of, you know, hold. It's kind of a bearish engulfing candle, even though it wasn't down that much, only down 60 basis points, but I'll have to keep an eye on it. If it starts to come in a bit, maybe time for me to get out of that position and then, you know, reestablish back into some support. What else was a mover today? Yeah, but both IBB and XBI. XBI was the worst of the two. And then a bunch of other names kind of were just kind of in the middle. So there wasn't that much, like I said, to trade. A couple other trades that, like I said, there really wasn't that much. There was a little bit of put buying in the morning, both SPYs and Qs puts, but I think that's pretty normal. This was interesting. Zen. This is another one of these software names, consolidating there at the top of value. So they went out to January. The last time I saw Zen calls a few months out worked really well. So these are, I think it's the 70-80 strike. Oops, I keep going to the wrong sheet. 70-80 going out to January. So someone is looking for more upside. So again, you know, how I take these trades is somebody's bullish, somebody's pretty bullish the name. They're positioning, you know, going out almost 6 months. And, you know, you could structure a trade any way you want with this one, but somebody's bullish. It's 5,000 of those January. You can see just the dollar amount of these. Whoops. 70-80 calls. So what do they buy those for? About 210. Oh, so that's a nice trade. That's a nice size trade that they did. You know, besides the rest of the trades on the sheet, besides the buying in JP Morgan and buying in the banks today, there really wasn't much else. There was a lot of stuff that, you know, was really nitpicky. I would say for the day, small stuff. You know, some of the names that we saw some call buying in, which is going to be happening more and more. A lot of names that are going to be reporting earnings. So it's going to get noisy for the next couple weeks. You know, like I said back into the newsletter from this weekend, sorry, I reference this a lot because I spent a lot of time on it. But, you know, I have found that swing trades, I swing trade less around this time, which helps secure profits. I don't think I said that right in the newsletter. Maybe I need to proofread the newsletter. But I really swing trade less. You know, again, you could day trade as much as, you know, to your heart's content. But I think for swing trading, it's a lot noisy. You want to position a little bit smaller, a little bit less overall positions, and secure your profits. Don't give it away during a choppy earnings season. So that's the main thing is a little bit of defense, right? Great coaches play defense. Great traders always are worried about what they can lose, rather what they can gain. And I think right now, going into all these names reporting earnings, it's going to be good. There's going to be plenty of opportunities to trade earnings as well. You know, to actually play different moves, maybe sell premium here and there. But as far as swing trading, which is what I really like to do, I have to remind myself, and even typing it out and putting it in a newsletter helps. Because it is a tough time to swing trade. All right, guys. So thanks very much for watching, and have a great night. See you tomorrow.